G'day there, welcome to the week ahead with Pivot Trader. Before I get cracking, just want to mention that we are wrapping up a membership drive today for Pivot Trader. So if you've been enjoying my videos, please go and check out the presentation I did with Woody, which goes into more detail about the results I've created for people over the last few years and the strategy that I'm using to manage risk and to make money trading some pretty high risk stocks. So yeah, I hope you do check it out. The link's in the video there for you, or it will also be in the article attached to the video that you're watching now. So please check that out, because today will be the end of that, and it's been a year since I've had a promotion getting people into my service. And the reason I do these videos for you is to give you the chance to make up your own mind about my way of understanding markets and how prices move and how I take advantage of them. That's enough of plugging my service to you. Let's move on to the markets. Looking at the S&P, I have been bearish. I'm saying that this current down wave isn't necessarily over. We've got a weekly change of trend in the S&P 500, first time for 20 months. So here's your COVID crash. There's my 10-week exponential crossing above the 20-week simple there, and you can see it's been a beautiful steady trend, hasn't it? Just hugging those moving averages whenever there was a bigger sell-off, going to the next moving average. And this is the first real threat to that trend, and the moving averages have crossed. We've had the retest of those moving averages after the trend has turned down, and often that's just a danger time, that's all, when you've got to be a bit wary that the current move down could just continue. And that's sort of the state we're in as the week begins, with the end of the week last week seeing quite strong selling pressure, but on the back of this Ukraine issue. And you've got to take it with a grain of salt when gold and oil go flying on the back of threats of war, because a few days later Russia comes out and says we're not going to invade, and then everything gets reversed. So we might be in for a bit of a whippy time on that front, but look, if they do invade, then gold and oil look primed to really rocket higher for the moment. And look, there's other reasons why they should be rocketing anyway, so it could just really push the rally further than it's already going. But looking at that S&P, for me, the one saving grace is if we look at it really close, and I just follow these weekly buy and sell pivots just to get a sense of what's going on. And we had the weekly sell pivot. There's your highest price. Weekly sell pivot on the weekly close below the low of that highest price in the move. So there's your weekly sell pivot, but then we've had a big sell-off and we've actually created a weekly buy pivot, because you've got the lowest price there and you've got the high of that move there, and there's your weekly buy pivot. So we do have that situation which can lead to sort of sideways motion within that range over a longer time period than most people expect. So until we get another weekly sell pivot, you've got to be just wary that this selling pressure could move into buying pressure, and we could just see a bit more upside, and then there's more selling pressure. So it sort of could end up just being a range. So I guess that's the only bullish aspect in the market right now, is that sense that there's a really strong uptrend from the last few years. So there's always, buying pressure in the wings if we see any signs of strength. And we have had quite a pullback, but there was enough buying pressure to create that weekly buy pivot. So that just then brings into play this buy zone as an area where prices could actually turn back up from. So early in the week, we could actually sell off down into there. And then if the buying pressure turns up, it could actually take off again. And the selling pressure may not be found again, until up around 46, 4,700 in the S&P. But then that could be the beginning of the huge league down. So you've really got to respect all of the weird and wonderful things the market can do and be prepared for anything, and just really listen to the market. But just right now, you've just got to be prepared for a continuation to the downside after that weak finish to the week last week. And if I just look in the daily, where we have had, this attempted recovery over the past few weeks after the very big sell-off, if we just look at that wave to the downside, you'll see that prices did get actually above the midpoint, but there's been pretty strong selling pressure up there and a very weak couple of days. So really it's once it busts below that low around 4,200, boy, then watch out. It could really keel over in quite a big way. So it's sort of a dangerous time where more selling pressure can lead to quite a cascade in prices down. So you do have to be wary, but I'm not going to call it that this is what's going to happen right now, because I've just seen it so many times before where it looks like it's gone, heads into that sort of buy zone, and all of a sudden it's trading back to the upside again before really meeting the selling pressure. So just make sure that everyone gets whipped out of their positions over and over. Sort of bearish on those equities. I think things can look pretty bad. You've got to be wary out there. Gold prices taking off on the back of the sort of worries that Russia is about to invade. And you should know this chart pretty well, where I'm looking at the correction over the last year and a half and sort of basing my analysis of it on that, with the buy zone there around 1725 to 1775. The midpoint of the range, very important, around 1880. And that really is where we've been trading between, hasn't it? There's buying pressure in the buy zone, but a wall of selling in that at that point of control. With this move at the moment, we've seen the buying pressure again in the buy zone. So this next wave through, if it can actually bust up through 1880, that's when things change. And I think the buying pressure could really take off. So it's getting pretty close to that, but it's not quite there yet. And always wary about these war threats, that the buying pressure one day turns into selling pressure the next as the news flow changes. But oil prices certainly looking strong as an ox, aren't they? Having broken out above the 2018 high after being rejected there for a while. So it is blue sky. I don't have much resistance up until around $100, up around 100, 110 bucks is sort of where I think this could get to on this wave. But you can see the way that prices move. You've just got to allow these waves to take shape, where it takes off, look like it can do nothing but go up, but it does have these pullbacks, sucks people in at bad levels, shakes them out before taking off again. It's just how prices move. So up around $100 though is where I think it'll get to before it meets that selling pressure. And it's all about this US yield curve, isn't it? It's still unfolding. We saw buying pressure coming in. This is the US 10-year bond yield chart, and you should know that my target is around this 2.2% on this move higher in yields. Now that we've broken out above that 1.8% region, so we're in that wave higher where it should keep going. But on Friday, with the threats of war, there was a bit of a flight to safety. So after hitting up around 2.06%, that buying pressure came back in and yields fell to around 1.94. So watching how this 10-year yield moves is going to be very interesting. Do we see buying pressure on the back of the threats of war, but ultimately the selling returns? And remember, this is a chart of yield. So when I'm going up, yield is going up and the price of those bonds is going down. So I still think it is ultimately heading higher, but yes, all of these worries about war could make that path higher a bit slower with those flight to safety bids coming in. And look, if war is declared and things go a bit pear-shaped, maybe we do see yields really back off before they finally do head higher again down the track. So you've got to be, expecting sort of any outcome from here. So I think we're in for an interesting week. For me, I think any buying pressure in equities is going to ultimately meet some pretty stiff selling pressure. In those S&P 500, for me, a little bit of a line in the sand around 4,600, which is where that 20-week moving average is. If we do see buying pressure again in the next few weeks and we break up through 4,600, it's just saying that the current strong downtrend isn't happening, and it could just mean we're going into a bit of a sideways motion or back up. It's just my line in the sand for the moment for remaining bearish this market. And while it remains below 4,600, there is just a chance of busting below those lows at 4,200, and that's when we could see a bit more of a sharp move to the downside as momentum really turns down. All right, that's enough for this week. Be wary out there. There's still lots of opportunities, but you do have to keep your wits about you. All right, cheers. I'll come back with more next week, and definitely check out that presentation. Thanks.